Welcome to the Money School Podcast Weekend Edition, recorded August 22nd, 2020. Happy Saturday, everybody. I hope you had a good week. I have a lot on the agenda today, so let's dive right in. First on the list is Apple versus Epic, checking back in on that. I've kind of evolved my position on this a few times over the last week. Early in the week, I really felt like Apple was going to come out on top of all of this. The developers, obviously, they want to control more of their profit and not pay the fees. But at the end of the day, they've agreed to those terms of service and they've agreed to pay those fees for those certain actions and for those services. And, if you don't like it, it's a free country and you can develop for another developer or for another company and you can distribute your apps somewhere else. However, the news that came out about Amazon getting a sweetheart deal, not paying the same percentages as everybody else, that's going to make people quite a bit more sour. And it's just fundamentally, it's such a harder position to defend from a corporate level versus, here are our terms of service. They're the same for everybody. Take it or leave it. If you don't like it, go develop for, some other $2 trillion phone company that has all these devices out and, brand loyalty and all of that stuff. Now it's going to become a lot bigger battle with the monopolization of a lot of other areas. And I think we're going to see it become a political beach ball over the next, 2-3 months with a lot of big promises of getting these companies in check. So that's one of the reasons why I don't really like Apple here. Obviously, it's a great company and it just prints cash, but the short-term headwinds around this are going to be complicated. You have the split coming up. It feels really elevated. I'm in wait and see mode on Apple. But this lawsuit has bigger ramifications for tech, generally speaking. And I think tech will be fine, but it's going to come down to a lot of this mudslinging and leaked emails and, corporate shame and a lot of the stuff that comes out. I mean, we're in an information-driven world, and that's really what moves markets and what builds and destroys wealth. So Amazon particularly is getting hammered with a lot of leaked emails that are just internal documents that are showing that, they're taking basics and low-key extorting a lot of their small third-party sellers that are on their marketplace and just, being really nasty with them. That's going to, as that stuff leaks out and it's led by the single richest human being on the planet, people are going to start looking around and say, like, you know what? F this dude. We got to take this guy down a peg, and we're not going to let him just treat people like this on this platform. People are going to keep using Amazon. Amazon's going to keep getting their money. But you're going to see political intervention on a near perpetual basis, even with a change in government. If it stays a Trump federal government, it'll be, even more so. There's just a lot going on with that company, and it becomes a really popular target when, you are putting small businesses out of operation and you're not paying any, you're paying really limited taxes, and, people don't like that. It's not popular. So, you'll see the populist movement against it. And Apple is now getting dragged into that with their control of the App Store, and that's just a really slippery slope. So I'm hands off on those names for now. They're two that I love long term, but I just want to get a little bit closer to some clarity on these issues before I really build positions in them. Moving on to Square, this company has become my top position overall. It's always in my top 5, usually in my top 3. It's grown, and just with the way that I've kind of churned my portfolio this week, it has become my top position. I believe in it both now and later. It's also, a bet the jockey, not the horse type of situation where I really believe in Jack Dorsey and what he's doing and his vision, for the next couple billion of, humans to get on the internet and getting the world unbanked to, participate in the modern economy. And you see a lot of, developing parts of the world, they're already getting paid in Cash App and having access to cryptocurrency and, the stock market from all over the world is really breaking down a lot of barriers. I think there's a ton of growth there. My primary reason for increasing my Square position was around the PPP and the next stimulus that's going to come. my anticipation is they're going to come back from this break at a governmental level, and they're going to make a deal that's going to be focused more on either the middle class or the illusion of the middle class, because the last stimulus, the heat that has really been coming down on both sides is that this money is going to either the 1% or it's not going to small businesses and to middle America and where voters want the money to go. And if you look at Square's last earnings report and all of the breakdowns that have come out about the PPP, they have done by far and away the most volume in terms of actual loans out, but for the smallest amount of money. And where they are really excelling is getting stimulus money to the food carts and to the small shops and to the independent small businesses that are operating all around the United States. And I think that is going to play into this next stimulus check. They're going to have more checks and balances that this money goes towards smaller organizations. And that's perfect for Square Capital, which is, a major part of what Square is doing now. The Cash App and a lot of the other stuff with the global unbanked coming online and cash tags and all of that. That's a later story. The now story is Square Capital, the information they have, their distribution systems. I mean, those are the terminals that are, processing all of the sales for the small, bars and restaurants and, local places you want to support. A lot of that is on the Square platform, and they get data and insights of sales and revenue and debt and all of that, where they can lever, that information to extend capital. And now that the stimulus is, not perpetual, but, ongoing in the short term, they're very well positioned to keep distributing that money and making sure it gets to where a more politically popular, demographic of people participate in that stimulus. And I think that is the part of the demographics in this country that both parties are going to be really going after over the next 3 months. So as far as politics go, I think we're largely fine. And it's just about where these promises are going to be made and how those headlines drive the stocks. I think we're in growth mode with, obviously the wall of worry always exists. There's always reasons to sell and to not be invested. But largely, I think that we're in an environment where if coronavirus gets worse, we're going to get a bigger bailout and the stock market will like that. And if coronavirus gets better and we can open up, the stock market will like that. And we're in a, really a win-win situation for a lot of stocks out there, especially if you ride the ones that are positioned for, growing into the world we're moving towards. And Square is, to me, one of the best companies for that. Patreon edition will have a little bit more on all my top positions and what I did with all of my stocks this week. Still in all of my top 5 except for Tesla, which had its split of reference or its owners of record yesterday are going to be in at that price once it splits in 10 days. If you buy it over the next 10 days, you'll still participate in the split, but the way that the split will happen, you'll get a worse price. So you've kind of missed the boat on that at this point. I made the decision to sell my latest position at 2,080. I'm totally out of the position now. I'll talk more about that on tomorrow's Patreon. That's the only position that I closed this week. I moved all of that into my top 5. The rest of my top 5 are all in the Patreon from last Sunday, and that's public. You can go back and listen to that if you want to hear about what I'm holding. We also got record housing numbers this week, which were great for my portfolio. A lot of the positions that I'm not trading around, that I'm just holding, are all real estate and value related, all the builders, a lot of the materials. And those continue to just churn higher. And as those numbers come out, I think they're going to be stronger and stronger. And since we're not going back to school for most of the country, I don't think the summer selling season is going to slow down. And we're going to just keep moving into fall with record prices and limited inventory and bidding wars all over the country, and just kind of a reshuffling of the deck of where people are living and a little bit of urban flight. I think a lot of those stories are overdone. It's a great time to start a business in New York if you can have a long-term vision, because short-term, rents are down by 30 to 50%, and you're seeing a lot of, those high-tax urban cities get you know, a flight, and then you're seeing a lot of the low tax housing markets, a lot of the suburban markets just continue to boom and not have enough inventory for the relocation that's happening. So I love a lot of the builders, especially the regionals that are in certain markets. And housing is just going to continue to be something that does really well. The real estate company that I own, our numbers, we're having, best month after best month after best month. And we're seeing just a high level of activity, and we're seeing a lot of refinances, and we're seeing a lot of, just all sorts of movement, which creates higher prices, and the limited inventory just creates a squeeze that is driving us higher and higher. So low supply and high demand, prices go higher. Circling back to TikTok, it seems like Microsoft is now out at this point, which I never felt like that deal was going to happen. Now there's rumors that Oracle is going to step in. I feel like we're further and further away from this being even a realistic thing to even matter, care about. The stock market has eliminated all of the market risk out of it, so I don't think it matters if it doesn't happen. And I think that there's more negative ramifications if it does happen. So I ultimately just think that this is a big political stunt, and it's just not going to happen. And the market doesn't want to set a precedent of companies being strong-armed into selling, and none of these investors want that, because they don't want it to happen to them. So I just don't think you're going to see a lot of push for follow through on this TikTok sale. And I also don't think that you're going to get a lot of really angry people that are using that platform that don't really see your point by banning it. And it's just going to become much more of a negative than it will be a positive if that sale can't get executed from a campaign standpoint. So I think it's honestly just mostly a campaign stunt, and we're going to see this TikTok stuff come and go. The last thing I wanted to touch on today's episode is what's happening with Walmart, Target, Amazon, Costco, a lot of the big time retailers that have a huge advantage over their competition in small businesses because they are deemed to have essential services and goods that have required them or allowed them to be open the entire time that we've been dealing with COVID. But a lot of the inventory and what they're selling is not essential items. And you go into a Target, and a lot of what they're selling there is not essential, just stuff that discretionary purchases that you want to buy. And a lot of those dollars that you would be spending in a lot of other small businesses, those are shut down. And the Target numbers that came out showed that they are taking a big share from a lot of those smaller players. And that's happening with all of these big guys. And, with Amazon gets a lot of that heat, and they get all the heat that Walmart used to get. And Walmart doesn't really even get mentioned in the same way, but Target is the exact same as Walmart and Amazon and Costco, and they're doing what's best for their shareholders and providing value to society. So I'm not trying to knock them because, I am an Amazon Prime member. I'm a Costco member. I don't shop at Walmart and I don't shop at Target, but if I had to, I would. And they provide value, but that value isn't without an expense. And the expense is a lot of small businesses just going away. And that's why there's a big disconnect from Wall Street and Main Street, is these big players are winning at a higher rate than the small players are recovering. And in the meantime, the big players have access to capital that can, keep them floating, even though they're all growing at huge rates. But the smaller players don't have access to that capital to the same extent. And the PPP has helped a little bit, and EIDL has helped a little bit, but on a relative basis, it's just not, it's apples and oranges. And for a lot of these retailers not even being able to be open, while you can say, like, I need to go to Target to get groceries, but then you're also, buying new shoes and, baby clothes and, whatever it is. I mean, there's a lot of other stuff that were those competitors, just their doors can't be open. So that's something to think about. And it's also one of the things to think about is a company called Shopify. They do a lot of online sales. They facilitate a lot of small businesses selling their stuff online. The same with Square. There's a lot of companies that are moving in that range. In Square's recent quarter, they had a ton of their businesses that were shut down or in limited sales migrate towards selling online. And that's going to be the theme of digitization is going to continue to dominate my personal portfolio and where I think the economic activity is going, just because we're moving into a hybrid space of real life and digital that just continues to cross over. So, I guess props to Target for pivoting and getting their business online and their pickup and for having a brand that people like to use. But at the end of the day, it's an unfair advantage for these retailers. And when you're making your bets and you're looking at, even a Macy's versus a Target, most of the Macy's are shut down. And you can go into a Target and you can buy competing goods. So that's why those sales are good, and that's why they might be pulling a lot of sales forward. So while those stocks have been good, there's good chance that, once their competition comes back online, if competition comes back, which it will, there always will be more competition. It might just be different. It might look different, might have a different name, might be owned by different people, but competition will come back. And until we get to that point, I think we're going to see these mega cap and, larger cap players just continue to dominate and take share and grow and have, alpha versus the rest of the market. Thanks for listening to the Money School podcast. You can subscribe and like on all the platforms that you enjoy your podcasts on, from Apple Podcast to Google to Anchor to Spotify. We're now syndicating everywhere. Your shares, your likes, your reviews, they all matter immensely, and I appreciate your support. The other thing you can do to support the Money School is to become a Money School member on the Patreon. There's going to be an episode tomorrow that every Sunday there's a special episode that I go over all of my trades of the week, what my top positions are, more depth on why I own them, and just a little bit more detail on what I'm doing specifically. That comes out, special episode for the Patreon members every Sunday. There's also free content on there. You can visit natebrantley.com and patreon.com/natebrantley. Thanks again for supporting the Money School. Have a great weekend, and I'll check in with you next week.